Welcome back to this Moneycontrol live stream. You're watching Closing Bell right here on Moneycontrol with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
It started out as an okay sort of day when we started flat on a negative note. We managed to get back into the green as well. But as the day progressed, we came into the throes of selling pressure and intense selling pressure at that, Yatin.
Correct.
Almost 200 points off the day's high. In fact, we gave up that 25,000 mark once again. At one point, we gave up the 24,900 mark as well, but managed to shut shop above that level. Nevertheless, it was a triple-digit cut on the index today, and the Sensex as well, over 500 points of day's high. The mid and small cap indices, which were doing well at one point, also succumbed to selling pressure, although they were outperforming the benchmarks today. The NSE advanced decline ratio was at 1:2. Sectorally, most of the sectors were in the red, led by autos, metals, realty, PSU banks as well. Which have been under pressure in recent times. But FMCG is the only pocket that showed some bit of resilience. So some FMCG names on the gainers list and some crude beneficiaries also were on the gainers list, given the fact that Brent crude has broken below that $70 per barrel mark. In fact, at 3-year lows, that's where crude prices are. So some reactions to that as well, although OMCs that were doing well too succumb to selling pressure. The Nifty Bank index also slid below that 51,000 mark. It was the weekly expiry for the Nifty Bank index, unable to sustain any kind of up moves that we have seen intermittently. But in terms of individual movers, then Bajaj Auto was one stock that was active today, Yatin. Heavy volumes, and the stock, of course, hit a fresh 52-week high as well, up somewhere around 4% in a weak market. Asian Paints, crude beneficiary, as I was mentioning, among the top gainers, and so was Bajaj Finance, even Bajaj Finserv for that matter, Britannia, ITC, HUL, all of these consumer names were doing well. On the flip side, what didn't do well was ONGC. Crude falling is negative for upstream oil companies, so ONGC was among the losers. Some of the IT names were also among the losers, like Wipro, even metals like Hindalco were under pressure. SBI continues to trade below 800 rupees, and BPCL, that started the day on a good note, succumb to selling pressure as well. But on the from the broader end of the markets, I think Prism Johnson is one stock that continues to do well.
Continues to do well, and 12% up for that stock. And if you look at the stock performance for Prism Johnson, the stock is gained nearly 40% on a 1-month basis and 27.5% higher in a 1-week period. So good move coming in there. RR Kabel, that stock moved 9% in trade today. PNB Housing, Century Textiles were the other movers in trade. Century Textiles, obviously the news that came in yesterday that they have bought nearly 10 acres land in Worli at a good price from the Wadia Group, and probably after that the stock moved significantly in trade. What was not doing well is HFCL, Sumitomo Chemical, Oil India and other oil marketing companies also slightly weaker in trade because two things. Number one, the crude fell below $70 a barrel mark, and probably the probability of the festive season petrol diesel price cut also augur well for oil marketing companies because the market probably is now pricing in petrol diesel price cut. Probably that is the reason why after a gap up all of the oil marketing companies, especially HPCL, BPCL, IOC fell in trade from the day's high.
That's correct. I think in the next couple of weeks, looking at crude prices, they will take a call as to whether or not they will be cutting fuel prices or not. But let's take a look at the stocks that are on our radar. I didn't mention Tata Motors. That was the biggest laggard on the Nifty today. Of course, there's been a UBS sell call. They have reaffirmed their sell call, and the stock was reacting to that. Plunged below the 1,000 rupee level for the first time since July. In fact, 9th straight session of losses for Tata Motors, and shares are almost 20% of their record levels. Let's see what UBS has to say. They have a sell call on the stock, target price at 825 rupees, which implies a 20% downside compared to yesterday's close price. It has flagged off potential margin pressures at JLR as well, given the fact that the premium products that were doing well till now, that may have moderated. And of course, there is pain in the domestic passenger vehicle segment as well. So that may not augur very well for margins. The passenger vehicle demand has been under pressure. We have seen it in the monthly sales figures as well. Of course, due to high inventories and reduced consumer spending, passenger vehicle demand has gone down, and that's something that automakers have been grappling with. Now, UBS has noted that JLR's focus was on higher margin models during the chip shortage, and it significantly boosted the average selling price as well. But this shift from apart from competitors helped create a buffer against weakness in the Chinese demand or weak performance in China. But this advantage is waning because demand for these premium products or premium models is subsiding or is declining. The success of Defender, Range Rover and Range Rover Sport as well as Trio, the success of these brands is actually moderating, and which could of course pressure the margins. Current order book has also fallen below pre-COVID levels, and discounts may also go up at Range Rover, right? If you recall, last 2 days, Tata Motors has been announcing heavy discounts, right, for SUV as well as EV models, anywhere between 2 to 3 lakhs as a part of festive discounts. But these discounts could also, have impact on margins going forward. So for Range Rover and the premium products also at JLR, discounts could go up, because as I mentioned, the performance is moderating there. But since the release of the first quarter numbers, shares have been under pressure, and the management commentary was also fairly cautiously optimistic, so to say. And there could be production constraints for JLR in Q2 and Q3 as well, due to planned production shutdowns as well as supply chain disruptions caused by floods at a major aluminium supplier. So all in all, things not boding too well for Tata Motors, and UBS of course has reaffirmed its sell call also on the stock. Stock was under intense selling pressure today, almost 5 to 6% down.
Yeah, 6% down, but UBS has not been right, since the start of the coverage, on Tata Motors. If you look at 15 months back, somewhere in July 23, the target price was nearly 500 rupees. Today the target price is 825, a 50% higher target price, and the sell rating stays. So probably UBS, as a house, has not covered Tata Motors that well. Whether or not they go right this time is anybody's guesswork, because globally a lot of things are moving. But yes, UBS there on your screen, that report clearly talking about the negativity which is there probably on lower order books. And by the way, BMW cut its guidance yesterday. It was largely to do with a braking system failure, because of which they will call back nearly 15 lakh cars globally. And because of this ABS issue, they'll not be taking more orders. Probably that is an opportunity for companies like Tata Motors, who are there in the luxury car market, because BMW, Mercedes and JLR, are the big three players in the luxury car markets. So I don't know if, the loss at BMW could be an opportunity for Mercedes or JLR. But yes, UBS, the coverage on Tata Motors has been negative for quite some time, and they've just maintained the stance. Nothing new in that report. Zee Entertainment, that is one stock in which Goldman Sachs has a neutral call. Target price is 165. A few days back, they announced settlement with Sony Pictures with regards to their merger. Obviously, both the parties will not claim any damages from each other, and obviously there will be a legal process to that particular thing, which obviously opens door for any strategic partner to come in after the settlement is done. That is what the market is pricing in. But Goldman Sachs believes that the FY 25 to 27 revenue estimate is expected to be declining by 2 to 3%. So they don't see any major growth, and probably that is the reason why they are neutral on the stock. They expect that the lower revenues due to subdued advertisement revenue also lead to a lower target price versus the current market price. So one thing that will be watched out by the market is a strategic partner coming in, who apart from Sony can do that deal is somebody's guesswork. But the key downside risk for that company remains elevated content cost, impact from digital ads and subscription revenue slowdown. So these are the few concerns which are pointed out by Goldman Sachs on Zee, and the stock clearly after the Sony deal fallout has not been doing well.
Yeah, Zee not been doing well, and it's a fairly volatile stock. Quite a lot of news flow surrounding the company, and which ends up impacting the stock prices as well. But auto parts were also, auto part makers or auto ancillaries were also in focus, Yatin, with the likes of Samvardhana, Motherson, Rico Auto reacting to this, BMW guidance cut. Of course, they have cut guidance, 2014 EBIT guidance, EBIT margin guidance to 6 to 7% from 8 to 9% earlier. Even they've even reduced the return on capital employed guidance to the range of 11 to 13% from 15 to 20% earlier. Now, they have cited the sluggish demand in the Chinese market as well as problems relating to the braking system supplied by Continental. That these are some of the major issues because of which they have revised their guidance lower. Of course, you were mentioning they have also recalled as much as 1.5 million cars or 15 lakh cars globally to address this braking system. and because of the hefty costs, they have to cut the guidance.
Correct.
And which is why they've done that. Morgan Stanley, in fact, expects further, downgrades to guidance in the coming quarter. Let's also talk about the Indian companies that have exposure to BMW, and they were reacting to it. And because of this, the second half could get impacted. Operations could get impacted due to that. Samvardhana Motherson is one stock. It has 5% exposure to BMW. 5% of overall top line comes from BMW. It's a key client for the company. So operations could be hit in the second quarter of FY25. In fact, even Ricoh Auto, that's one company which attributes 11% of its top line to BMW. 4% revenue for Suprajit Engineering also comes in from BMW, and other companies like CEAT, Good Luck India, Minda Corp, Apollo Tyres, all of these companies also have some bit of exposure to BMW. Now, in the past 1 year, some of these shares have been doing fairly well. Look at Motherson, it has gained somewhere around 87%. Good Luck India has almost doubled. But this braking system issue seems like, it could slam the brakes on the kind of up move that some of these auto ancillary companies have, or stocks have seen. So let's see how things pan out really. If there are further guidance cuts from BMW going forward, there could be some serious earnings hit for some of these auto companies. But right now, news not boding well for some of them.
Absolutely. And BMW, clearly that lower guidance does not augur well for key suppliers, because the production probably gets disrupted in the shorter term.
That's true. But Yatin, just want to mention, globally things are not looking great this afternoon, because Dow futures were down somewhere around 200 points. So although US markets ended mixed yesterday, we saw good traction on Nasdaq and S&P 500. Today could be a different story, given the fact that, we also had that first presidential debate between Kamala Harris and Trump. And, Trump didn't have a very great debate, so to say. So let's see how how Wall Street really digests what kind of comments came in that debate. And of course, we have the CPI data also coming out later today. So lots to react to globally tomorrow morning. Of course, but with that, we have come to the end of this edition of Closing Bell. We'll be addressing all the global issues tomorrow on Opening Bell at 9 a.m. So don't forget to tune in. But for now, it's a goodbye from me and Yatin. Thanks a lot for watching, and have a great evening.